In the digital age, cybersecurity is not just an IT problem. It is the fundamental layer of national security and economic stability. For years, investors looked at SentinelOne and saw a hyper-growth engine that burned cash as fast as it acquired customers. But if you look at the financial filings from 2022 through the latest Q3 fiscal year, 2026 report released in late 2025, you are witnessing a metamorphosis. We are no longer looking at a cash-burning startup. We are looking at a company that has successfully navigated the transition from growth at all costs to profitable, efficient scale. Today, we are going to deconstruct SentinelOne's financial journey, analyze the strategic shift in their Singularity Platform, and explain why their aggressive push into AI and cloud security positions them as a dominant player for the next decade. To understand the future, we must contextually analyze the past. The 10K reports from fiscal years 2022 and 2023 depict a company aggressively grabbing market share. Revenue growth was triple-digit, but operating losses were deep. This was the land grab phase. However, as we move into the 2024 and 2025 annual reports, the narrative shifts. Management began emphasizing operating leverage. This means growing revenue faster than expenses. The data shows they executed this perfectly. They disciplined their spending on sales and marketing while their technology, the autonomous AI agent, allowed them to scale without needing a linear increase in human headcount. Now, let's focus on the most critical data. The fiscal year 2026 quarterly reports. The Q1, Q2, and Q3 filings for fiscal 2026 tell a compelling story of resilience and maturity. In the third quarter of fiscal 2026, we see a company that has not only sustained high double-digit revenue growth, but has also fundamentally improved its cash flow profile. The Rule of 40, a key metric for software companies, combining growth rate and profit. Margin is something SentinelOne is now consistently targeting and achieving. The Q3 2026 financials reveal that their free cash flow margins have turned a corner. This is the signal institutional investors wait for. It means the company is self-funding its own innovation. Let's talk about the technology moat. The core differentiator found in their filings is the Singularity Platform and Purple AI. Unlike competitors who rely on human analysts to sift through alerts, SentinelOne uses on-device AI to detect and mitigate threats in real time. In the 2026 filings, we see increased R&D efficiency. They are innovating faster than they are spending. The expansion into cloud-native application protection platforms, or CNAPP, and data lakes is expanding their total addressable market TAM. They are no longer just an endpoint company. They are a comprehensive enterprise security platform. We must also address the competitive landscape. The cybersecurity market is crowded with giants like CrowdStrike and Microsoft. However, SentinelOne's financial resilience in 2025 and 2026 suggests they are winning enterprise deals because of their open architecture and ease of use. The annualized recurring revenue, or ARR, continues to grow, driven by larger deal sizes and higher net retention rates. Existing customers are spending more money with SentinelOne every year. This net retention rate is the heartbeat of a SaaS company, and SentinelOne's pulse is strong. The balance sheet remains a fortress. Throughout the fiscal years analyzed, including the latest Q3 2026 report, SentinelOne has maintained a massive cash position with zero debt. In a high-interest rate environment, this is a strategic weapon. It allows them to acquire smaller technologies, invest in AI talent, and weather any macroeconomic storms without answering to creditors. So, what is the outlook for the long-term investor? The volatility in the stock price over the last few years was the market digesting the transition from a speculative growth stock to a fundamental compounder. As we look toward fiscal 2027 and beyond, the drivers are clear: AI automation, reducing costs for customers, consolidation of security vendors onto the Singularity Platform, and the relentless rise of cyber threats. SentinelOne is positioned at the intersection of these trends. In conclusion, the journey from the 2022 10K to the Q3 2026 10Q is a case study in operational discipline. They promise to turn the ship toward profitability, and the numbers prove they have done it. For the investor willing to look past the short-term noise, SentinelOne represents a pure-play bet on the autonomous future of cybersecurity. The foundation is built, The cash is flowing, and the AI era is just beginning.